I said, others will be joining us along the line. Yes. And as we go, I've already said that if you have any question, just put it down. I'll give you room to ask your question. Okay. I want us to finish this in a very short time so we can have time to do other stuff. So to begin with, my name is Enoch Alemele. Okay. Enoch Alemele. That's my official name. So tonight I'm going to present to you Stocks 1.0. Stock 1.0. The 2.0 is actually the master class, okay, but the 1.0 is the beginner class. You need to know the Stocks 1.0 before you do the 2.0. So tonight we are looking at the 1.0, and then tomorrow, God willing, we will do the 2.0. So officially we have begun with our meeting. Now, what is stock trading all about? I believe that we all have heard what we've all have come across the word stocks. Okay, yes, you have your own meaning, or you have looked it out in a dictionary or whatever. Now we are going to actually learn what stocks mean. Okay, we will learn what stocks mean, how to go about stocks. Either we want to invest into stocks or you want to be a trader. Now I will give the differentiation as we go along. Okay, so let's look at a few things that I would want us to get ourselves familiar with by the end of tonight's lesson. Okay, so by the end of the lesson, I choose to share this because I'm a professional teacher. Okay, and I want us to have an objective for what we are going to learn. At least by the end of the lesson, you should be able to know certain things. Okay, so that is what we are looking at. So by the end of the lesson, you should be able to differentiate between business and investment. Business and investment. You should also be able to mention at least 3 forms of investment from what we are going to do. Then you should also be able to explain what stocks mean. Okay, you should be able to explain to someone what stocks mean. And then you should also be able to differentiate between stock and then stock exchanges. Stock and then stock exchange. So that is a few objectives there. Now, what is business and then investment? These two words are two different things altogether. Okay, they are not the same. Business is different from what investment. Now let's look at what business is. Now with a business, okay, we want to look at a few differences between business and investment. With a business, every business requires a skill. Depending on the kind of business you want to do, it requires a certain skill. Okay, it requires a certain skill. Like buying and selling, you can buy some item and then you resell it to someone to make a profit, and as you do that, your business will keep growing. Okay, gradually your business will keep growing. Now this means that you are with a business, you need to be actively involved. You cannot open a business and then you close your store and you'll be sleeping and then you think you will make profit. No, that is not how business works. You have to be actively involved in a business. Now on the other hand, with investment, you don't really do any form of active work. All you have to do is to invest your money and then your money works for you. Okay, so with investments, your money works for you, and then with business, you have to work in order to make the money or make profit. Okay, so your activeness in an investment is not really required. It's not really required. Then investment, we should be able to take note of this. Investments take time to yield returns. Investment takes time to yield returns. It is not a get quick rich venture. Okay, when it gets to investment, it is not a get rich quick venture. So if you are thinking about coming to put your 100 cedis, please mute yourself when you join the meeting. If you are thinking of putting your 100 cedis, 200 cedis in stocks, and then you wake up tomorrow and then you see 100,000 Ghana cedis, that is not how um, investment work. Okay, real investment do not work that way. It is not okay a Ponzi scheme. Now we know that with the advent of the internet, a lot of people, we have been programmed to think that investment, you put your money in something and you get some money quickly, and that is investment. No, real investment what takes time. So don't think that stocks trading is just one of those schemes or Ponzi schemes. You put your money in there and then you wake up tomorrow morning and you make millions. No, that is not how it works. But I want to assure you that stocks trading is one of the real reliable investments you can do for yourself. Okay, yeah. So let's look at some types of investments. Okay, with the types of investment, we can talk about stock exchange or stocks trading. It's one form of investment. We also have forex trading. It's also another aspect of investment. Then buying gold, you can buy a gold and then you keep. Okay, you can buy gold and then you keep. It's also an investment. Now just last week, gold, okay, price hit its all-time high. I mean, by all-time high, I mean that gold price has hit, or gold has hit a certain price it has never gotten to before. It has hit a peak price just last week. So just imagine if your parents or your mother or your father or your brother some time or some years back bought some gold and then kept it. Okay, by now you have made a lot of money. So that is investment. Buying gold and then keeping is an investment. And then real estate. So you can also invest into real estate. You build houses, you sell, you rent it out. Those aspects are also some form of what investment. Okay, but among all these investments that I have mentioned, before you can trade forex, you need quite good amount of money. Before you can buy gold and make good profit, you need huge sums of money to do that. And then real estate, not to talk about real estate, you need huge amount of money to go into real estate. But why did we choose stocks trading? With stocks trading, you can buy stocks. Okay, you can buy stock with a very small amount of money, 10 cedis, 20 cedis. Some stocks are even like 8 cedis. Okay, some are just little amount of money. You can actually invest into what stocks. That is why we have chosen stocks, or we have chosen to learn about stocks among these investments I have mentioned. Now, why stocks? Why are we talking about stocks? Okay, like I said, you need little capital. Okay, you need little capital. You can monitor your portfolio or the different stocks you have bought just on your smartphone, just on the phone in your hand. You can monitor it. Okay, yes, you can monitor it on your smartphone. Then you don't need any prior knowledge to be able to trade in stocks. You don't need any technical knowledge to be able to trade in stocks. Okay, and then the risk involved here is very minimal. It's very minimal as compared to other forms of investments I mentioned earlier. Then what at all then is the meaning of what stocks? Why are we here? This is actually the business of the day. This is the reason why we are all learning. Okay, so what is a stock? Okay, now let's define what a stock is. Now, a stock is a unit or a piece of ownership in a company. Stock is the same as a share or equity. Okay, a piece of ownership in a company. Okay, so we can talk about companies like MTN, Coca-Cola. You can mention all the companies we have here in Ghana. For you to be a shareholder of that company, you need to buy a piece of ownership of that company, and that's what we call stocks. Okay, if you buy a stock, it means you are buying a fraction or a share of that company. That is what we mean by stock. Then having a stock in a company makes you a part or a share owner of that company. Okay, so if you have bought shares with MTN, anytime you buy MTN airtime or data bundle, it means you are helping MTN company to grow, and therefore it's like you are helping your own company to grow. because as MTN grows, your investment also what grows. So that is what it means. So if you have share with any company, whether local or foreign, you are a shareholder of that company. You own a part of that company. Okay. And how interesting will it be if you can proudly say that you are a shareholder in Apple, you are a shareholder in Facebook, you have a share in Coca-Cola, you have a share in Toyota, like Tesla. You can mention all the companies we have. How you can imagine how you feel if you have a share with this company and you see them what growing gradually, day by day. You see them growing. Okay, so that is how it is. You can even buy shares with Google. You can buy share with any other company we have on the internet, or we have around the globe. You can actually buy a share. You can be a shareholder of that company. Then we look at how do you buy shares. Okay, so companies, all these companies that I mentioned, okay, it does not belong to one person. Just like Tesla, we know Elon Musk to be the CEO. Okay, yes, but it doesn't mean the entire Tesla company belongs to Elon Musk. No, he's probably the CEO, or he owns a larger share of that company, but it doesn't mean it belongs to him alone. There are a lot of people who have actually bought shares in it, meaning that the company has given some fraction of it to the public. Okay, and then you can actually buy. Now, when these companies are first established, okay, we have something we call IPO, initial public offering. Okay, initial public offering. That is the first time a company showcase its shares publicly. Okay, so when a company evolve and then they want to start operation, they bring out what we call initial public offering. That is at the beginning stage of the company. So you can actually buy a share into that. That is the initial public offering. But as we talk now, most of these companies have bypassed these stages because they are not at their beginning stage. They are companies that have grown to a certain point. Okay, so take note of this. The first time a company offers its shares to the general public, okay, it's called the IPO. Now, when you give the company money, in exchange you are giving a unit or a fraction of the company's shares. This makes you a shareholder or a part owner of that company. Now let's look at what the stock market is about. The stock market is a network of stock exchanges. Okay, it's a network of stock exchanges where investors buy and sell shares of publicly traded companies. So it's a network. It involves a lot, varieties of companies that ranges from tech, education, anything you can think of. Okay, all these companies coming together is called the stock exchanges. Now, investors like you and I purchase these shares, which allows the company to raise money from the public to grow or expand its business. So these companies actually offers their shares, we buy them, and they are able to gather money in order to be able to expand their company. Okay, and as they do that, as they take our money and they give us a part ownership of the company, they are also going to share profit with us. And as we go along, we shall look at the various types of profit. Okay, now how does it work? There are two types of markets. Okay, there are two types of market. We have the primary market and then the secondary market. Now, the primary market is where shares are created and a company lists its shares through IPO. Take note of this. The primary market is where we have the IPO. Somebody is complaining that the network you should start the stock exchange for me. All right. This is a recorded, for the sake of time, this is a recorded meeting. So I will actually share the recorded version to you so you can make references. Okay. So I said the first time a company offers its shares publicly, it's called the IPO. Okay. Yes, it's called the IPO. Now, the primary markets, okay, like I said, is different from the secondary market. So in the primary stage, okay, the company is still starting up and therefore shares ideas with others who put in their money to build the company. So when the company shares what they want to do, or we want to manufacture cars, we want to manufacture aeroplanes, helicopters, we want to go into gun manufacturing, this is our idea. Okay, we have shared this idea, what we want to do. We bring everything to investors and then they look into it, and then investors think, okay, this company has a future, therefore they give their money to the company, and then the company use the money to develop its business. Okay, and this is the primary stage. Most of these companies are out of these stages because there are so many, or these big companies, some of them are even older than we are. Okay, so it means that we missed the primary stage, therefore we cannot be shareholders. Okay, therefore we miss the primary stage. Okay, yes, so most of the companies we have are not on the primary stage. Then we have kindly forgive me, I think. All right, so let me know if you can hear me. Just type 2 in the chat box. Just type 2 in the chat box. If you can hear me, type 2 in the chat box, and then we continue from there. All right, thank you, Obiba, thank you, Jude, thank you for your feedback. Okay, so I said that we have actually missed the primary stage of most of these companies. Okay, so what we have available is a secondary market. Okay, now let's look at what the secondary market means. The secondary markets, okay, which is essentially the stock exchange. So when we talk about stock, what is it all about? We are mostly referring to the secondary market. It is essentially the stock exchange. It's where the supply and demand of these shares are traded or bought every day. So every day in and day out, there are people trading shares. Some people have bought and they want to sell. There are people there also to buy. So there is the aspect of demand and supply, and that is what happens on the secondary market. Okay, and that is what you and I are going to learn to trade or invest, because when we are buying shares, we will buy from the secondary market. Okay, so this is where the masses put in their money to work. You want your money to work for you as a form of investment, you have to come to the secondary market, buy share from a company, and then you become a shareholder. So majority of these companies are not on the primary listing again. Like I said, millionaires have bought them. Okay, people have bought them already from the primary stage, and we missed out, or probably some of us were not born during that time, so we missed it. But we can equally be shareholders of that company on the secondary market. Okay, yes, we can be shareholders. Now let's look at how you make money through stock exchange. How do we make money through stock exchange? All right, so we have what we call some primary stocks are coming. Okay, I will attend to your messages. You can leave them in the chat box. But some primary stocks are coming, particularly the AI. Yes. So there are still companies that are coming up. Okay, there are still companies. I'm talking about companies that are already existing. but there are new companies that are coming up, especially in the tech industry. Okay, when it comes to technology like AI and all those things, okay, there are companies that are coming up, so you can actually buy shares with them. And these companies have future, because we know what technology, we know whatever we have, or the kind of future we are going into revolves around what technology. So these are some of the things you look out for when you want to buy stocks. We shall talk about them. So let's look at how you make money with what stock exchange or stocks trading. Okay, so the first one we want to look at is dividend payment. The second one is value appreciation. Let's take note of these two: dividend payment and then value appreciation. All right, so let's look at dividend payment. Companies can distribute part of their profits to shareholders on a quarterly, okay, or annually basis. So every 3 months or yearly, some companies pay what we call dividends. Okay, so for example, MTN will be paying dividends. I think in February I saw a message circulating around that MTN is paying a dividend of 0.9. Okay, 0.9, which is 90 pesos. So if you have like 1,000 units of shares with MTN, what you have to do is to multiply 0 or 90 pesos by 1,000. That's 1,000 units of shares you have, and then you see the profit you have made within that period, whether quarterly or the annual dividend that was paid. Okay, so that is how dividend payment works. With dividend payments, okay, companies that pay dividends, your money is actually intact. So if you bought with, for example, you bought $30 of shares with MTN, okay, your $30 is actually intact. Okay, and then the profit that comes will come and add up to your $30 that you use in buying that shares. That is dividends. Companies that pay what? Dividends. With that, your original money is what? Intact. Then we have value appreciation. Okay, value appreciation. You make money when you sell your shares higher than when you bought them. So for example, you bought a share with Apple. 1 unit of share maybe costed you $40. Okay, and then in a month's time, that same unit of share cost $50. It means that the share you bought has what? Appreciated. Therefore, the difference in the price has now become your profit. But for example, you bought a share with Apple this month, it was maybe $30 per share, and the next month or next, you bought it today, and the next week it depreciates to $20 per share. It means that it has depreciated. Therefore, you have to wait till what it appreciates, then you can withdraw and make profit. Now, when it depreciates and you sell, you make a loss. Do you understand? Yes, you make a loss. So with the value appreciation, once you buy the share, you wait for it to increase in value, then you can then sell and then make what? Profit. Okay, you can then sell and then make profit. Now, not all companies pay dividends. Okay, not all companies pay what? Dividends. Now let's look at the kind of companies that we have. Okay, the kinds of companies that we have. The first one, we have blue chip companies, and then we have growth companies. Okay, there are two: blue chip companies and then growth companies. Now with the blue chip companies, they are large companies with established record of growth. Okay, they are large companies with established record of growth. For example, Coca-Cola is a very large company and has been there for years. Okay, so Coca-Cola is it's a form of blue chip company. They usually pay dividends, and they have been in business for years with stable earnings. Okay, and these companies have less potential for growth because most of them have reached their peak. They have reached their peak. Now with growth companies, they are still growing like the names suggest. Okay, and they are looking at reinvesting most of their earnings. So for example, a company like Tesla. Okay, a company like Tesla is a growth company. They keep expanding their company. Okay, they don't usually pay dividends. Growth companies don't usually pay dividends. So if you buy a share with Apple, a company like Tesla, don't expect to be paid dividends. You only look at whether your share will appreciate or what depreciate. Okay, and that is where you make the profit, or you can also make a loss when you withdraw your funds whilst the stock has what depreciated. But why will you do that? Why will you buy a stock and then you wait when it depreciate and then you withdraw? Nobody does that. You only withdraw when what it appreciates. Okay, now share price grows faster and fluctuates a lot. So when it comes to growth companies, because the profit is based on what depreciation and appreciation, the price keeps fluctuating because someone will be selling, someone will be buying. Okay, so the price is not stable. It keeps what appreciating and what depreciating. So that is how it is. So as a new investor, it is good if you start with what blue chip companies. It is good if you start with blue chip companies. That is companies that what pay dividends. Okay, their track record is usually solid when it comes to blue chips companies. Now there are some facts you need to know. When you want to invest into stocks, you need to think of long-term mindset. You need to have a long-term mindset. Don't think of going into stocks today and then you want to make millions in the next 1 month. No, stocks are long-term investments. So we don't use monies like your school fees, your hostel fee, or probably your rent, money that is supposed to be used for rent, or money that is supposed to be used for food. Okay, we don't use those types of monies to buy stocks because they are long-term investment. You don't use temporary monies to do that. Okay, so to get the best of stock market investment, you plan to buy and hold for a long time. So there are people who bought shares in Coca-Cola maybe 10-20 years ago and they are still holding it. That's a long time. All right, but you can also buy, sell the next 6 months, the next 3 months, the next 1 year. It depends on how long you want to hold. And when it comes to stock investment, the longer you hold, the higher the profitable it becomes. Okay, the longer you hold, the more benefit you gain from it. So don't be in a hurry to sell because the price appreciates a little. Sometimes when we start with it, you can buy a stock today, tomorrow you see that it has appreciated maybe by 1%, 2%, 5%, and you are in a hurry to withdraw. No, you have to hold it. Okay, you have to think of long term. Please mute your microphone. Okay, now this person, please mute your microphone. All right, so nobody buys gold and then sell gold today and then you sell tomorrow. No, when you buy, you look at a long term before you sell to make profit. Nobody buys a land today and then wants to sell tomorrow or next week because the value of the land has not appreciated. Okay, I know a man who bought a piece of land, one plot of land for 5 Ghana cedis, somewhere around the 8890s. Okay, 8890s. And just last year this man was selling one plot of the land. Okay, because there has been massive development at the area. The man was selling one plot of land for 50,000 Ghana cedis. This is a real story. I personally went there to ask for the price, and one plot of land is selling for 50 Ghana cedis. And this was an old man who invested into the land more than 20-30 years ago. He bought just one plot of the land for just 5 cedis. So that is what an investment. So when it comes to investment, you think of what? A long term, not short term. Okay, so this is the secret of most rich people. This is the secret of most rich people. They invest in assets for long time, and as the years increases, the value also increases. That is the kind of mindset you need to have when it comes to what stocks trading. Now, someone will ask, what is the best time to buy shares? Okay, what is the best time to buy shares? There is no specific time. You buy when you have the money. So whenever you get your 50 Ghana, your 100 Ghana, your 200 Ghana, your 10 cedis, you can buy shares as and when you get your money. Okay, so you don't have to time the market. No, you can, once you are thinking about long term, you buy as and when you get little money. So you can be buying on a monthly basis when you are a monthly worker, or when you've been getting money on a daily basis. You can apportion some of your money to be buying shares. Okay, yes. So like I said, your 10 Ghana, some of the stocks are selling at maybe like 8 Ghana, 10 Ghana, 20 Ghana per a unit of share. So you can buy as many unit of shares as you want. Okay, and all you have to do is to keep on topping up. So you buy to this month, maybe next month you get money. You can please mute your microphone for me. If you can hear me, mute your microphone. Yes, so you can keep on topping up. Okay, that is how it is. So you keep on topping up. So you don't have to wait till you have millions before you make budget for buying your stocks. Like I said, you can buy it little by little. Okay, and little drops makes what a mighty ocean, like we say. So when or how to know the best stocks to buy? Okay, it is not every stocks on the stock exchange that you can buy. So there are certain things you need to look out for before you buy any stock. You need to understand what the company does and their business model, what they are into. Okay, you can't just buy a share with the company without knowing what the company does, what products line they are into. You should know these things before you would buy a share with a company. Okay, you should know the management details. You should know their competitive advantage, their innovation, net worth, loyal customers, the company's culture, how they are known to operate. What do experts think about the company? Okay, all these are informations you need to know, and these informations are what available on available on the internet. You can just go to Google, any other company you put in there to give you details about the company. Okay, what experts think about it in the next 3, 6, 1 year. All these informations are available on the internet. Okay, so you can just type and then the information will be on your fingertips. How many stocks should I buy? Someone may ask. There is no hard rule for this. The important thing is to have a diversified portfolio. Okay, the important thing is to buy maybe a share with Tesla, you own a share with Apple, a share with Facebook, a share with this company, a share with this company. You buy small unit of shares with all these companies. That's what we call diversified portfolio. Okay, and that actually is very good. If this one doesn't appreciate, the next one will appreciate. You know how these companies are competing. So you have a share with Apple, you have a share with Tesla, you have a share with Facebook, and it continues. Okay, and then understand that your geographical location is not a barrier to any of these companies we are talking about. Whether you are in Nigeria, Cameroon, US, Ghana, wherever you are, so far as you are connected to the internet, you can actually trade or invest into stocks. Okay, so if you are a Facebook user, if you are a Twitter user, if you use Amazon or Apple products, etc., why wouldn't you want to be a shareholder of that company? Okay, you bought those products. Why wouldn't you want to be a share with them, so that even as you buy their products, your business grows? Okay, remember, if you have a share with them, you are a part ownership of that company. Okay, you always buy airtime, you buy data with MTN. Why wouldn't you want to buy shares with MTN, so that as you buy airtime and data and the company keeps growing, you also make a share of the profit they make? Okay, this is the reason why you need to be a shareholder in some of these companies. Okay, so there is no limitations as to the kind of stocks you can trade. Now we are coming to a conclusion. Okay, so this is my conclusive advice. There is this book, The Richest Man in Babylon. In one of the financial principles, it states that before you do any other thing, okay, when you are a monthly worker, before you take any money from your monthly salary to do anything, pay yourself first. try to take part of the money and invest it into something before you start paying your bills, before you start paying your fees, or your food, your rent, your utility bills, and all of that. Okay, pay yourself first before you give money to your girlfriend. Okay, pay yourself first. That is a financial principle. So you should dedicate some amount for yourself. Okay, maybe every month, some 20 Ghana, 50 Ghana, 100 Ghana. You can use that to invest in a long-term future for yourself. Okay, if you are not married, you can even start buying shares for your kids. You can start buying shares for your kids. If your kid is young, you can buy shares. That's a long-term investment. By the time the kid or your child gets to 18 years, okay, he has a share. He is a shareholder of a particular company, and your child will be proud of you. By then, the investment has become very huge. Okay, yeah, and they can use that to actually as a starting point. Some of us, we didn't get this advantage. Imagine if by this time, when you were young, your parents bought a share in Coca-Cola or bought a share in one of these companies you can think of, and as at now the companies have become huge. Okay, by now that investment has become a very huge investment that you can actually sell that share and then start your own company or start life with it. Okay, that is how it is. So it is on us to take advantage of some of these information that we have on our fingertips. Okay, so thank you all for making time to listen to me tonight about our course on stocks 1.0. Tomorrow we shall look at stocks 2.0, and I want to share with you what stock 2.0 involves. I'll read it out. So in stock 2.0, we are going to look at the different trusted apps. We have apps that we use in trading stocks. Okay, we have apps that we use in trading stocks. We shall look at them. Okay, and how we have to create an account with them and all of that. Now we will look at the stock broking firm for both Ghana and foreign companies. We have stock broking firms, okay, or we call them stock brokers. Okay, they works like their operation is like bank. You create an account with them, you deposit money with them, and then you buy the stock through them. I'm not saying they are banks. I said their operation is like a bank. In a banking, they work like the banking system. You can also we'll look at how you can buy stocks from the secondary market and track the progress of your investment using your phone. So we look at, if you buy a share, you can actually be using your phone to check, has it increased, what is going on with this stock you bought. You can actually track all these records on your phone. Okay, right on your phone. And we shall look at how to track trending stocks and know which one to go for. How to track trending stocks and know which one to go for. We shall also look at how to claim dividends. Okay, how to claim dividends in case your parent bought some shares for you when you were young and you haven't been receiving your dividends. We'll look at how to claim that. Okay, who knows, maybe part of those that have millions of, some of us may have had millions of cedis sitting in a company we are shareholders of. Okay, then we shall also look at a list of stocks that are doing well, which you can start with as a beginner. And then we'll have access to stock that pays dividend monthly. Okay, stocks that pay dividend monthly. Now, the best time to buy stocks. Okay, we'll look at the best time to buy stocks so that your money can appreciate. And then we'll look at detailed step-by-step approach of starting buying, fully understanding the stock market. Okay, these are the things that we shall look at in stocks 2.0, which will happen tomorrow. Okay, we shall look at the apps that you can use to trade the stocks, how to buy, how to create an account, and all of that. We shall look at all these things tomorrow in our next lesson, which is the stock 2.0. So at this point, I will pause for us to ask our questions. We have We have just 40 minutes to go. We are closing exactly at 8:30, but we have just 40 minutes to go. I'm giving room for us to ask questions. Question time. If you have any question,